Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with the sanctions on Russia. Russia has been cut off from a lot of its assets in other countries, and with bond payments coming up, it's saying it's only willing to pay those in rubles, which have, of course, dropped precipitously in value. With payments due this week, that basically amounts to default. The IMF, though, says while that's not unlikely, it's not a huge deal for the global economy. Tell us about the situation with Russia, its currency, and its bonds.
Yes, if you look at the Russian default possibilities, it has increased quite substantially as the Western sanction has occurred. Obviously, they are not able to pay back if this kind of sanction continues. But nevertheless, the IMF is talking about the impact will not be that significant. If you look at the total size of the debt, it is amounting to about 120 billion, which is not that significant, and it's not going to cause any systematic relevant. However, though, if you remember the 1998, when there was the IMF crisis in Asian countries, the size was quite significant, but in any case, the volatility has occurred. So I think that the people are waiting for the actual default to occur in order to buy back any of these emerging market currencies or emerging market related stock market. So for the time being, this uncertainty because of the Russia is causing overall the emerging market bond market as well as the equity markets to be very volatile. And if you look at the Asian market, particularly China, who is in favor of Russia, showing a quite significant drop in terms of the bond value as well as equity value.
Well, China-related stocks have plunged on concerns among investors that several Chinese companies could be removed from American stock market for not meeting audit requirements. Now, these aren't the companies named by the SEC, but the announcement has affected other names listed in the U.S. like Alibaba and Baidu. Tell us about that and the overall story today in the global equity markets.
Yes, the shares of Chinese heavyweight trading in the United States basically plunged on Monday. Most of stock prices are falling anywhere between 5 to 15% on one-day losses. If you look at the overall losses, is piling up to 1.1 trillion won worth of it. If you look at the overall changes that we've seen in the past, we saw in the past 6 years a rising trend of the Chinese equity market values that basically pretty much went down by 613 billion since the all-time highs of October 2020. Clearly, this is happening to all the companies that are listed in the U.S. Most of the is falling anywhere, as I said, anywhere between 5 to 20%. We think that this is causing the uncertainty about the investing into the Asian market that's affecting not just the China, but Korea as well as Taiwan. Overall volatility seems to be happening right now. However, though, if you look at the valuations and if you look at the fundamentals of the Chinese companies, it looks reasonably quite strong. So therefore, the volatility might last only till this Russia-Ukraine invasion that continues. Once the war is over, we think that the market will recover. The volatility will die down in the future.
Well, Korean stocks down today again, with foreign investors continuing to sell. Some of the worst hit today: shipping, construction, oil, gas, gains for medical devices, banks, and so on. Tell us about the domestic market.
Yes, pretty much as I said, the Asian markets are tumbling in a sense because of the Chinese market. Korea also got affected quite heavily. It seems to continue to show a declining trend. Kospi was down by about 1%. However, the Kosdaq was down by a very slight amount because the down was quite significant yesterday. It seems that foreign investors are continuing to be the net seller of the Korean market. They sold about 600 billion worth of Kospi and also 37.5 billion won worth of Kosdaq, and also they're selling about 200 billion won worth of futures. Also, I guess the BOK is talking about potential rate hike in the future. It seems that the oil price is putting burden on the Korean economy, and therefore the people are quite concerned about the inflationary pressure as well as the current account surpluses numbers might be falling fast. All in all, it seems that the uncertainty remains because of the foreign investors are net seller of the Korean market. However, this applies the same thing as Chinese market and Korean market. The fundamentals are very strong at the current point in time. Therefore, the valuation seems to be too cheap to see continuation of net selling in the future.
Well, the exchange rate in coordination with that continues to rise. The won is trading above 1,240 to the U.S. dollar, which is pretty much the highest it's been since the start of the pandemic. Good for exporters, maybe, but what do you make of the situation and with the weakening won?
Yes, if you look at the Korean won, it continues to depreciate as the overall emerging market currencies are depreciating. But if you look at the dollar's trend, we saw the dollar index has stabilized. It did go up to as high as 99, but it seems to be stabilizing now. And given the fact that the rate hike, the speed of it is going to be more of a gradual one than a fast one. And if you look at the Korea, Bank of Korea has already raised interest rate 3 times since August to 1.25%. So foreigners are not going to be continuing to sell this market, given the fact that the fundamentals, including the manufacturing side, the semiconductor side, and electric car side, seems to be quite strong with the batteries and parts. Yes, though, if you look at the current account surplus numbers, it has fallen quite significantly because of the oil price rise. The Korea's energy importers, higher oil price does affect negatively. So therefore, there's a chance of the Korean won depreciating a little bit further. However, though, as the dollar index stabilizes and the current account surplus remains to be there, we think that the Korean won should stabilize in the future as well. More likely that as Russia-Ukraine issue passes, then the Korean won should stabilize much faster than most of the other emerging currencies.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.